Let's start off first with some of those margins. They look good for the quarter. The big question is this sustainable, or is this something that was just kind of a one-off, a distortion from those Fed hikes?
Well, thanks for having me again, and hi to both of you and Katie, Romaine. You know, I think when you look in the quarter, you're seeing the benefit of higher rates, and I think we positioned our balance sheet to get the benefit of this over the last few years, and it's coming through as we expected it would. Now, as you look forward from here, you're certainly going to have more challenges as you look at consumers continuing to spend, which is drawing down some of the deposits. You're seeing rates potentially get to closer to a peak, and so a lot of those factors will drive net interest income over the coming quarters. But we're really happy with where the quarter came in, and you can see that through not only the net interest income, but also the profit, the earnings per share that came through, and that's not only revenue, but it's also the work that we're doing on the efficiency side.
Talk to us about the deposit situation right now. I think you guys did report an 8% drop firm-wide in deposits. I also saw that the actual deposit costs, average deposit costs at least, went up something to like 83 basis points. Give us a sense here of how you're trying to balance that right now.
Yeah, well, as you look at what's happened over the last year or so, you've seen rates go up 400 plus basis points, and you've seen deposit costs go up only 80 basis points. So that's still quite a significant sort of margin that we're earning there, and that's really performing as we thought it would across the different portfolios. As you look at the large corporate space, those prices those deposit prices are a little bit higher, a little more competitive, and then it goes all the way down into the retail space, but we feel really good and comfortable where that is, and it's largely playing out as we thought it would, quarter to quarter.
Well, at the same time, you do have competition for those deposits coming from some of your banking peers, also from the likes of money market funds. We know that cash is very competitive right now. How much more would you expect those deposit charges to go up from here?
Well, it's hard to tell exactly how much more it's going to increase, but I do expect it'll continue to increase as, particularly if rates keep going up, you're going to see that definitely increase as rates go. And you've certainly seen money market funds, you've seen client be the beneficiaries of what's happening, particularly over the last month or so, and that's to be expected. Our wealth management clients are moving some money from their deposit accounts into money market funds or other alternatives, and I'm sure that's going to continue to happen at a pretty stable pace, I think, for at least a little while as we go forward. But the backdrop is still really strong, right? So consumers still in really good shape. They're spending. Commercial customers are in good shape. So overall, as our customers do well, we'll continue to benefit from that activity.
And Mike, I also want to talk about the commercial real estate portfolio. You do have a bigger exposure to commercial real estate than some of your peers. You've said that you're looking closely at the portfolio. What does that mean particularly? Are you still going to be lending to offices, for example?
Well, I think we continue to have a really robust, commercial real estate business, and we've been in this business a really long time, and we've got a great team that focuses on it. And certainly, when you look at the office component of it, there's definitely going to be some stress in that portfolio as we go. But that's really going to play out over a long period of time. It's going to be an extended period as you sort of see that happen. If you look at what's happening today, it's actually performing quite well, and you're not seeing really any losses of any significance come through the portfolio. But when you look at it, there really aren't ways to generalize it. It's going to be a property by property, location by location discussion about how it's working, and we're seeing our borrowers and our sponsors be very constructive in those dialogues. But as you would expect, we're going property by property to understand it, and I think it'll be it'll play out over a long period of time. But we will see some stress as time goes by, particularly in the office space. As some of the secular changes around how people use office space start to take hold.
Well, how are you strategizing right now when it comes to, I guess, new loans coming to market here, not just what's already out there here? Is there a sense here that there is enough of a slowdown, or you feel that there maybe needs to be some degree of retrenchment given some of the trends that we've been seeing in commercial real estate?
Well, I think there's a slowdown already in terms of transaction activity in the commercial real estate, particularly the office space. You're not seeing a lot of properties trade or get sold or even refinance in any significant ways at this point. So I think that slowdown's already here. And again, I think it's going to come back to the fundamentals of the property and the place and the location that they're in that really drives it. And so for us, that's really what matters: is who's the sponsor, where's the building, how what are the characteristics of it, and how do you get comfortable with it? And if all those things make sense, then we'll lend against it. But overall, I would expect that exposure will come down.
Mike, I'd love to talk a little bit about the Wells Fargo workforce, of course, with UBS taking over Credit Suisse. Are you going to be looking to hire some of those displaced Credit Suisse bankers?
Well, look, we look to attract people across our businesses from a lot of different places, and so we're not focused on just one competitor as we sort of think about getting the right talent, because it really matters. You really want to make sure you have the right person in the right seat at the right time for us in terms of where we are, and so I think that'll mean we hire from a number of different places. And the good news is we're doing really well attracting really good people. Really across the whole business, but particularly in our investment banking business, and so we're pretty confident we're going to be able to continue to do that.